Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at energy and oil prices. Well, the oil prices have been a little bit better. They've seen a steady decline up through the June and into July, and then we saw things really fall apart. And oil, as we look at it from 50,000 feet, it does trade off the dollar. It does trade off the fundamentals. And sometimes it just does its own thing. And right now the market is really kind of tying into some of the other variables, whether it be the dollar, whether it be supply, whether it be global demand. There's a lot of balls up in the air with oil right now, and we are near the bottom of that range. We tested the key support in that 66 and change level, aforementioned from the highs of close to $73 not too long ago. So oil's nearing the bottom of that range. It held today, despite the fact that dollar saw a major bid, and you've got sanctions on Iran, and you've got supply talk, and you've got global GDP and possibly global demand starting to wane a little bit. So there's a lot of different forces pulling on oil right now. It is on the recent lows, but however, we have to remember that oil at any moment can sort of do its own thing, regardless of what the dollar's doing, regardless of what the numbers are telling you in the economic reports. So I think ultimately right now we're starting to maybe see some buyers step in from a technical perspective, with the idea that going into the weekend there is some major geopolitical risks that are out there and that are going to be looming for quite some time. And some of those other fundamentals, looking at the Iran sanctions, looking at issues with not only the United States and Russia, United States and China, and all that's going to build not yet a fear that we kind of get out of oil when we see oil prices spike, but maybe just concern, we'll call it. As I have already mentioned, oil prices do rally, despite the fact that the dollar has been rallying since, going back to early April, late March. Oil prices have been ascending. So it isn't necessarily always going to be an inverse trade. And while we did see oil prices come off early today, they did bid into the afternoon, bouncing off key technical support, and the dollar did as well. So they are moving in tandem late this afternoon. Lastly, let's look at the positioning in oil. It's at all-time, speculators at all-time high, longs are just near it. Are they starting to get out? Are they starting to get a little fearful? And I think that we are starting to see a modest selling. Some of those speculators may be looking to get out now and maybe get a pullback, and maybe if things in calmer waters. I don't know, but it's been certainly holding at these levels, which suggests to me that risks remain elevated, that there is concern for higher oil prices, whether it be through future production cuts, whether it be through more sanctions, whether it be through lower or higher demand globally. Something that I think a lot of people are starting to scratch their heads about. And ultimately, there is the trend is your friend with oil, because, like I said before, the dollar's been very strong since April, and oil has as well. So it hasn't been yet a dollar trade like we've seen, say, in gold, where the dollar has really taken the wind out of gold sales. It hasn't done the same thing in oil, and it likely won't, because oil is a different beast. And as I said before, it's also going to trade on its own, and we could come in on Monday morning and things could be totally different. Doubtful, but it could be, as we trade off key level 66 and change. We're not going to be targeting the low 70s into next week, but we'll wait and see what the supply numbers tell us. We'll wait and see what the global demand numbers tell us, and we'll see how those sanctions hold as we move forward, and the president puts his foot down. So right now, oil prices on the decline, but got a nice bounce off the technical 66 and change level. We'll have to wait and see what happens with the data next week. This is Todd Colvin coming to you from the floor of the CME Group.